pretty cool. All right, so that one's live, that one's live, that one's live, that one is live, and one more. Okay, got one more to go, and get you out of the way. There you go. Okay, do this right here, display capture. All righty. So, Mike, you know the way it works. I mean, you're a paid member, so you just chime in anytime you like, ask a question if you have any questions. You know.
Yes, sir.
All righty. So let me get all this up and running. Got one more camera to turn on, and yeah, we'll chat later. If you want to chime in on that, we're gonna have we're gonna do, what do you call that? We're gonna have a Zoom class to do that spreadsheet. That way everyone could have some input on it, because what I thought is pretty cool. Atropolux, no, at Portlux, Epilux. I can't read some of these names. You got a question? Shoot. Hey, Rick the Wells coach. Holy cow. I wonder if this is the real Rick the Wealth coach. Because if it is this Rick the Wealth coach? Okay. I don't play that game, Mr. Rich. If it's you, great. If not, hey, Mary June, how are you today? What are we doing here? Okay. Okay, so how do I get rid of this now? All right, so I don't know how to get rid of that, so I'm going to delete it and just freaking start over again. Leave now. Let's reboot. Sorry about that. We'll do that again. Mate, how you doing? So let's get out of that. Here we go. And yeah. What was that? Okay, try it one more time. There we go. And there we go. All right, enough of that crap. All right, so let's get the ball rolling. Good evening, everyone. My name is James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow, take you along for a ride for a safe, predictable, and consistent 1% per week. Now, I'm using nothing but pre-qualified dividend stocks, and those are companies that are consistently profitable for more than 2 decades. It's really not that difficult. You got the dividend kings, the dividend aristocrats, the dividend champions, the dividend contenders, and then for the fun of it, we're going to throw in Warren Buffett's list. You know what the funny thing is? In about a year, what are we going to call that? Because we can't call it Warren Buffett's list anymore because, you know, he's retiring. And we just can't say Warren Buffett. Dyson, what's happening? Jason White, Sergio, how are you guys doing? Hello, hello, hello. All right, there we go. All right, so first on the list, I'm going to pick up from where we started off last night. Got a big question. And Muck Capital, hey, James, I looked up cross-margining. It is a risk management strategy that allows traders to use excess margin from one account to satisfy margin requirements in another account. Basically, yes and no. Now, they don't allow the trade anymore, but they used to have something called single stock futures. Now, the interesting thing about a single stock future is very similar to a calendar spread, but the requirements are different and you get to have a higher leverage. So you used to be able to buy a single stock future and sell a call option against it. Now you're talking about futures and stock options. So you're cross-margining the two from futures and options. So whoever thought of using a stock option on a futures contract? Okay, so not many people know that. I was doing that years ago and there was only one company that allowed me to do it. That was Interactive Brokers, because they had everything available. But nowadays, they don't even have single stock futures anymore. Diamato, I came halfway through the convo. Did you say you are building a spreadsheet? I build automation tools for a living. Happy to see if I can help. Diamato, dude, drop me your number. I will include you in the conversation. It's an awesome spreadsheet. And I spent like 4 hours. I woke up at 3 in the morning because the idea came to me like 3 in the morning. It's like, holy cow. And I just sat right up and said, I got to write this down. I'm thinking to myself, 3 o'clock in the morning. I'm nice and comfortable, tucked into bed. It was nice. But anytime you have an idea like that and you don't initiate it and you don't follow through with it, it goes away and it's just like gone forever. So I always made it past. Anytime I come up with a really great idea, I stop whatever I'm doing. I remember one time I had to pull, I'm driving down the highway, I had to pull over to the side of the road to write something down. Because if you continuously exercise that ability, because once you get it, it gets stronger and stronger the more you use it, the more you exercise it. So it was a great idea. If you want to be included in it, great, because I don't know how to do it. No, I know how to put a spreadsheet together. That part I know. But what I'm having in my head, that's the difficult part. I want a line chart, a graph on the top of the spreadsheet so I can see all my positions right there. I'm going to explain it a little bit later, so let's keep on moving. And Tony, how you doing? Rigatoni man. Ooh, Rigatoni man, good. A triple X, Cool Bean, AVG. Chevral, how are you today? Darian, Cool Beans, Aaron. Hello, hello, hello. Okay, so is it true that nice guys always get sidelined and ignored? Talking from, yeah, absolutely. Nice guys always get shafted. Good girls, nice girls, yeah, they always go after the bad guys. Actually, girls in general, they always go after the bad guys for some strange reason. And nice guys, we always finish last. Paul, we cannot see anything on Zoom. Okay, well, the camera should be pointing at the screen. Okay? And the idea, Paul, the idea of the Zoom being on the phone is that you can talk to me, because right here you can only interact, with the key button. But here you should be able to see what we're doing. So let me see if I can get my camera on.
Yeah, I see you on the TikTok. I just can't see you on the Zoom call. There you go.
There we go. All right, you got it? All right. So anytime you have a question, just say, "Excuse me, James, I got a question." Okay? Other than that, just keep it on mute, because we don't want any noise in the background. I know how you party over there, all your neighbors coming over, drunken party, stuff like that. We don't want to hear that. Be jealous. Come on, Paul, that was funny. All right, anyway. My favorite dividend investor, Jeff. Yeah. All right. Hey, Bill, how you doing today? Bill, excuse me, James. Go ahead, Mr. Bill. Do you think I can get stinking rich if I trust tarot cards and with the stock market? Don't get me started on that, please. How do I feel about crypto contract trading? Aaron, I don't do cryptocurrency. Now, don't get me wrong. I love the idea of cryptocurrency. At this moment in time, cryptocurrency is still in the infant stages. Okay, the stock market's been around for 400 years. Futures market has been around for a lot longer than that. Okay, but cryptocurrency, new kid on the block, no thanks. How much money can I have profit ability so I can get rich in 1 week just from dividend stocks? Interesting question, Bill. Now, you do realize everybody has a different definition when they use the word rich. Okay? What's your opinion on no. Sorry. No. Okay, so I'm basically, here we go. Over here. What do we have over here? Brud. Interesting. Brud. Sean. Good evening, Sean. Dominic's soccer. Dominic, good for you. Dominic, how old are you and what position do you play? I'm more of a defense halfback, and I'm in my 60s. Granted, we have somebody who's in their 70s and he's still playing. Anyway, let's keep on moving. Thanks and fine. You're welcome. Cool beans. All right, so caught up with the questions. Let's keep the ball rolling. All right, first and foremost on the list from yesterday. Okay, I write stuff down. I don't trust computers. Harley Davidson, we did. Next on the list is Advanced Auto Parts. Now, just to let you know, if I have some stock, I will let you know. And yes, I do have some Advanced Auto Parts. So let's take a look at Advanced Auto Parts and see what is going on. All right, glasses. Marinda, good evening to you. David, how are you? Okay. Sometimes I wonder, how can I see out of these things? All right. Jeff Jurassic, how you doing? QC, how are you? All right. Stefan, I bought some Pfizer today for the dividend. Not the best stock, but I like 7.2%. Now, Stefan, is that 7.2% for a week or is that 7.2% for a year? Because we have to have some clarity here, because I'm not 100% familiar with you, but I am 100% familiar with what I'm looking for. And when somebody puts a percentage for the year, okay, Stefan, you're going to like this, because I'm looking and I'm showing you exactly how to get 1% a week. 1% a week comes to 52% a year, Stefan. Okay? Now, I'm pretty sure 52% is going to be a heck of a lot better than 7.2. Bill, I found a really interesting video. It was on Friday the 3rd, and I think you should check it out in 2017. Bill, send me a link. I'll take a look at it. Please do me a favor. Don't waste my time. It will really disappoint me. All right? And I don't like to be disappointed. All right, TJ, John, G-Man, Big Hawk, Trimmer Asher, what's happening? Okay, so let's get going. We're going to take a look at, what did I just say? Advanced Auto Parts. Advanced Auto Parts, AAP, here we go. Now, I always tell people, whenever you're investing in dividend stocks, or any kind of stocks, oh, I just returned, okay? I have no idea who said that. All right, anyway. Michelle, what's happening? Okay, I'm looking, anytime I look at a chart, I'm looking for 5 things specifically. Any chart I'm looking for 5 things. Where's the high? Where's the, I gotta change that, I can't see that. Sorry, had to pause for a moment. All right, bring this over. What's going on? Here we go. And right there. Okay. Here, let's try this again. You ready? I'm looking for 5 things. The high, the low, where was it a year ago? Where is it now? And what direction has it been flowing for the year? Down, big drop, sideways, down, and then sideways again. We're currently at 31.45. Now, anytime I buy a stock, I'm looking to automatically and quickly and immediately sell it to someone else, because I'm looking for a profit. I'm not here for the fun of it. I want to make a profit, a consistent, predictable, safe 1% per week profit. That's what I'm looking for. So specifically, if I'm buying it at 31.45, the safest trade that I know of that doesn't require the stock to do absolutely anything is the covered call. So if I buy it at 31.45, which is the last traded price, the closest strike price. Now, a covered call, simply you buy the stock and you sell an option against it. Now, we're going to get into that a little bit later on, but let me just work through the numbers on this and see if we can use this one as the start for the day for our very first trade. 33.34, the closest strike price. That's these numbers right here. 30, 30.50, 31, 31.50, 32, 32.50, so on and so forth. If the current stock price is 31.45, now we all know the closest one of these numbers to 31.45 is going to be the 31.50. Now we have one minor flaw in the works of life as of this moment. Okay? Monday and Tuesday are gone. Okay? Nothing we can do about that. Now, when you're trading stock options, is what we're doing, we're buying dividend stocks, good quality dividend stock companies. And then we're selling a stock option against them to give us weekly cash flow. The problem we have, or I should say the challenge we have is a weekly option has 5 days. 5 days, Monday, Tuesday, Wednesday, Thursday, Friday. That's 5 days. Well, the situation we're in at this moment in time, Monday and Tuesday are gone. So we got 3 days left. Most likely, we're not going to get 1%, because if on Monday to Friday is the maximum amount of time we have, time value, because time actually has a price tag to it when you're in the stock market. It's called, not the Delta, Vega? No. Delta Vega. I think it's the Vega, the time decay. Okay, so time actually has value, and they actually put a price tag on it. in the stock market. You can sell time, and that's what we are doing. I, buying the stock at this price here, I'm selling somebody the right to buy it from me at a certain time, at a certain date, okay, at a certain price. So I'm selling time. I do it on Monday. So Monday I have 5 days. Okay, that's 100% of time value for 1 week because there's only 5 days in a week. I know there's 7 days in a week, but you only trade 5 days of the week. Okay, so the maximum amount of time value I have is going to be on Monday. That's 5 days. Okay, Monday's gone, you just lost 20%. Tuesday's gone, now you lost 40%. Kind of doesn't make it worthwhile to do this week. So what we're going to do is we're going to look at the time value for this week, and we're going to look at the time value for next week. Now, next week, we have 10 days of time value. This week, we only have 3 days of time value. So if you didn't know, the strike prices or the strike dates on a weekly option, 9 May, that's this Friday. 16 May, that's next Friday. 23 May, 3 Fridays away. 30 May, 4 Fridays away. 5 Fridays away, 6 Fridays away, so on and so forth. Every single Friday, one of these options is going to expire. The maximum amount of time you're going to get on a weekly option is 5 days, Monday through Friday. Well, tomorrow's Wednesday. We got 3 days left. So we're only going to get 60% of the value that we could have gotten on Monday. No, Darian, it's called theta decay. It's not delta, Darian. Okay, so NSX Garage was right. Kudos to you, brother. All right, anyway. David Nice. Okay, Rose Gold, how you doing? El Pablo, ¿qué pasa? Okay, Bill, I'm not going to look at LKQ stock. I know for a fact they're not 20 years old. Bill, I will take a look at Apple. I will, because I like Apple. Theta decay, yeah, Joseph, that's right. Okay, no, Vajan, it's not delta. Okay, it's theta. Anyway, let's keep on going. So, all right, Darian, hold on. Could you explain how you utilize theta and delta? Okay, Darian, you are new. You are so new, you have no clue what I do here yet. So if you just sit, chill, relax, everything's going to be explained. I'm here every single night from 9 p.m. until 11:30. Okay, ask and you shall receive, Matthew 24. What we're going to be doing is looking at dividend stocks for a safe, predictable, consistent 1% per week. We're looking at this moment in time, advanced auto parts. I do own some advanced auto parts. Just want to let you know so you're not surprised. Hezekiah, how are you today? Cool beans. All right. As I was saying, if I'm buying this tomorrow morning, 31.45, I'm going to do the 31.50 strike price. 31.50 strike price is going for 66 cents a share. That is more than 2%. If you do not know your math, 1% a week is over 50% a year. 2% a week is over 100% a year. 3% a week is over 150% a year. Okay? So I do this every single week. I equate it to a scenario. You ready? Here's the scenario. Okay? Some of you might get this, some of you might not. Do you have a garden? You know, we grow tomatoes, squash, cucumbers, that kind of stuff. Great. Well, you need to take care of it every day. You need to pull the weeds, you need to water, you need to garden it. Okay, great, fine. You don't like that one? Good. You have a dog or a cat? Yeah. You got to walk it, you got to clean up after it, you have to tend to it, you got to feed it every single day. Okay? Do you have children? Well, you got to water them, you got to feed them, you got to clothe them, all that kind of stuff every single day. So we're going to equate our money to take care of it every single day, except for Saturdays and Sundays. We all deserve a day off, right? So Saturdays and Sundays, we're going to take the days off. But treat your money as importantly as you treat other things in your life. The challenge most people have nowadays is they spend more time planning a family barbecue than they do on their personal finances. I'm not one to judge. Okay, I was horrible with money my whole adult life. Okay, it wasn't until just recently when I started thinking about, hey, I'm getting older, I'm going to need to retire. Where the hell's my money going to come from? Because we all are getting older every single day. And eventually the finish line, okay, is wherever you decide it to be, which will be retirement. I retired at 59. Okay, some people retire earlier, some people retire later. The house business, I'm not going to do ET. Okay, that's energy transfer. Do yourself a favor, take a look at the numbers for energy transfer. I used to do them years ago, but for some strange reason, the premiums have changed. It's just not worth it financially. Don't get me wrong, I like the company, but the financial payoff is just not there anymore. Okay, Darian, I'm going to answer the question about your theta and your delta in a little bit. Okay, I'm not ignoring you. I'm working into it. I'm working it into the plot. All right, anyway, so as I was saying, we're going to be looking at this week's options and next week's options. I got to plug these in before they die on me. This one going in first. All right, hold on. Hold on a minute. Where is it? Is that one right there? There it is right there. 2 cords. See me. How are you today? For your information, wait a minute. My info through your webcam to contact us page. Oh, okay. Yeah, D'Amato, I'll take a look at that. It gets sent to my email, or one of my emails. I got like 12 email addresses. Not easy to keep track of everything. Jesus is in the house. Cool beans. Who do we got? Gail. Good evening, Gail. Yeah, baby. Yeah, baby's in the house. Cool beans. All right. So Lisa M. Good evening. Okay, so where were we? Oh, we were on the covered call. Now, to answer your question over here, Darian, okay, the trading strategy I am about to share with you, okay, Darian, the trading strategy I'm about to share with you was created specifically. It was custom built, and I'm going to show you exactly the person it was custom built for. Wrong one, damn it. All right, let's go. And this one here. It was custom built. The trading strategy I'm about to show you was custom built for my 9-year-old daughter. Because in 2008, she jumped on my lap and said, Daddy, what are you doing? Can you teach me? Now explain to me in a manner in which I will understand, okay? How do you teach a 9-year-old to trade stocks? Most adults don't even get it right. So I'm gonna go with the oldest one right here.
Hi, I'm JC, and you being part of my internet website called Thingy, which my dad doesn't like me calling it that, but I do. Being part of that, you're going to be getting weekly lists of stocks that I'll be trading.
All right, that's me, about 15 years ago.
21 days in a month. What does that mean? That means every single day you can buy different stocks. Every single day there's a different company paying out dividends. Yay! Seriously.
Every time, I like watching that every day. It makes me laugh. Every single day it makes me laugh. Now, yeah, we were being silly, we were being goofy. She was 9 years old. Okay? How do you keep a 9-year-old entertained? Well, you got to make it fun. You got to make it exciting. You got to make it simple. You got to make it easy. You got to make it profitable. And you got to have some kind of leverage, which means if you make money, honey, you get to spend it. Okay? So that's what she was looking for. All right. So, Darian, the little princess, you just saw her, my daughter, when she was 9 years old, the trading strategy you're about to see was created specifically just for her. Here's the criteria. 9 years old, it had to be simple. It had to be safe. It had to be predictable, consistent, and no way for her to lose. 5 things, no way for her to lose, okay? Specifically, created just for her. So, 5 rules came along with it. Rule number 1. If it's not on the list, don't buy it. Now, what do I mean if it's not on the list, don't buy it? What you're going to see as the night progresses is that I have a stock list of companies that I like. Now, I shared it with you earlier. Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list. Okay? I plug it into a calendar. The calendar tells me when they're paying their dividend. Okay? That may or may not be important to you, but it is to me. And the reason why it's important to me is because stocks have a tendency to increase in value or in price just before the EX date. So knowing that little tidbit of information, what would you do with that information? Think about it. If you knew a stock was going to move at a certain time or a certain date, what would you do with that information? Stevie, what's happening? Now, most people say they'll buy the stock and take it for the ride, for the run-up. Yeah, fine. It's not as profitable as other trades. There are other trades that are more profitable than just buying the stock. And that's why we're here. Okay? We're here because we know something that other people don't know. We have a good idea. When is a stock going to move? Why? Because it normally does every single year. Now, if you don't know, let me show you how I found out. Okay, let's go back to here. Historical data. So now we're looking at AT&T. I want to show you something interesting and fun. You might not find it fun, but it is interesting. Okay, so what we're looking at now, and I tell everybody, anybody who's interested in finance or investing, if you are serious about investing in your own money, you need to find a financial website that you like to use, that you can navigate through, that you can find the information that you need in order to make a good, qualified, educated decision. You don't just buy anything. Never ever listen to someone, "Oh, I got a great day." Nope, I don't like FinViz. Sorry, ETB. VP David Graham, how do I get access to your calendar? Okay, David, it's not my calendar. Sit tight. We're going to get to that in a minute. Darren, Bank of America, I'll write it down. BAC. We might not get to it tonight because I got like 20 other stocks from last night stuff to go to. Okay? But I will touch on that in a little bit, all right, David? Is ENB good dividend? No. I'll take a look at it and we'll discuss it. Okay, ENB. Is that Enbridge? ENB. All right, so here we go. What I'm looking at now is Yahoo Finance. Whatever financial website you want to use, great. Get familiar with it, understand it, look where the numbers are, what you need to know. So this here is called the data stream because it holds data. Okay, so what's here? You have the date, you have the opening price of the day, the high price of the day, the low of the day, the close of the day, the adjusted close, and then the volume. Also, you have the dividends. Okay? Dividend. Now, the nice thing about Yahoo Finance is I can go back. Let's go back just 5 years. Because I can go back the maximum amount and go back all the way to the beginning of AT&T. That's a little bit too much information. I don't need that much. Let me just show you what I'm looking for. Okay? So, here's the dividend. Now, I found this when I was trying to create a trading strategy for my daughter. Okay? The dividend is here. 10 days before the dividend. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Okay? 28, 26. That's the opening price of the day. You take the dividend, you add the opening price of the day, and how many days does it take in order to hit that target? That's how I came up with it. Then I created some nice, interesting, fun software where I didn't have to do that. All I did is put in the sticker symbol, and the software did it all for me. It showed me how often does a stock go up in value just before the dividend. And by knowing that information, now I have something most people don't have. I know that certain stocks move consistently and predictably just before the dividend date. So what trading strategy is simple, safe, and predictable for a 9-year-old? Now there are a bunch of them. Let me show you quickly. Here you go. Okay. Single option, vertical option, back ratio, calendar, diagonal, straddle, strangle, covered stock, synthetic call, butterfly condor, iron condor, vertical roll, collar with a stock, double diagonal, unbalanced, deep and wide. And then you click onto these things and it goes even deeper. All right. Look at that. Double diagonal, double calendar, double strangle. Okay. And then it goes even deeper with this one. And then it goes even deeper with this one. These are all the different trading strategies that are available for you to trade. Anyway, the covered call is the safest and most predictable. And you don't have to do anything. Okay? Buying the stock, you have to wait for the stock price to go up, and then you have to sell it. Who knows how long that's going to take? But a covered call, I can buy it tomorrow morning, and we are going to do a sample. I'm going to do one right now and show you exactly how it works. You can buy a stock first thing in the morning and sell an option against it within seconds of buying it. The strategy, a covered call, means it does both of the trades at the exact same time. Okay? So just think, you're standing in line and somebody's right behind you. I'm buying and this person's selling. You can literally do it within 2 seconds of each other. You buy and 2 seconds later you can sell. And there's your profit. What happens to the stock after that? Well, we'll talk about that also. ETB, can you explain a reversed albatross spread? Now, ETB, you were missing something, what I just said 2 seconds ago. The trading strategy I'm going to show you for free, no strings attached. Covered call on a dividend stock. It's called Dividend Capturing 2.0. Simple, safe, predictable, 1% per week. That's what I'm looking for. Now, 1% a week is 50% a year. If 50% a year is not good enough for you, then you're probably better off going somewhere else, because that's all I'm going to talk about. Do I know other trading strategies? Yes, I do. Am I giving those away for free? No, I am not. I had to draw the line somewhere. Okay? I'm here every single night from 9 until 11:30. I don't get paid for doing this. I'm doing this out of kindness of my own heart. And I'm also creating a video log for my children and my grandchildren. So when I'm gone 20, 30 years from now, they will have all these videos that they can watch through to be able to learn what I am trying to teach to you guys. Nice. Where to get the software? Okay, Connor, this is not software. This is a trading platform. Okay? The trading platform you can download for free right online. What do you call it? Thinkorswim.com. Now, it is owned by Charles Schwab. They'll let you use it for free for a while, but eventually they do want you to, to open up an account there. Now, don't get me wrong. I'm not that fond of Charles Schwab. Really, I'm not. Okay? I joined, let me think. 15 years ago, I wrote a book on choosing the right trading platform. Okay, so I've written 14 books. That was one of them. And yeah, it's a little outdated now, but still, I went through each and every trading platform there was. And there was one particular trade that I was looking for. It's called a trigger trade. It allows me to buy and sell the same position without having to wait for the fills. Okay, Thinkorswim was the only one that did it. And that was over 20 years ago. Funny thing is, Thinkorswim hasn't changed in 20 years because Dave built it. Guy named Dave. Dave built it. He sold it to TD Ameritrade. TD Ameritrade got bought out by Charles Schwab. So now Charles Schwab owns it. And there are literally hundreds of us that keep using this strategy, this platform, and don't want to change. Pegasus, Benjamin Graham, I have no idea. Okay, Mr. Nice Guy, is that 100 shares calls? Now, you do realize that sentence doesn't make any sense, but okay, who are your top 3 investors? I ain't telling you that, Pegasus. That's none of your business. But thank you. I appreciate you. Thank you for that, ETB. Connor, nice. Where do you get the software? It's not software. Mr. Nice Guy, does Thinkorswim let you paper trade with no money? Absolutely. As a matter of fact, Mr. Nice Guy, I always encourage everybody, even if you're a seasoned trader, to continuously paper trade. Watch the screen for a second. You ready? Okay, coming down here, right there. This account is a real live account. This one here, this is a paper trading account. And yes, I still paper trade even after 20 years because I'm always coming up with new interesting stuff, and I don't want to risk any money until it is proven to work consistently. Okay? John Warner, how are you today? Diamato, is Thinkorswim the only platform that does the simulated trade type you like? Yes, it is. It's called a trigger trade. Pegasus, if you don't know Benjamin Graham, that tells me what I needed to know. Okay, there's like a couple of billion people on this planet. What is so great about Mr. Benjamin Graham that I should know? And where does he fit in my life? So I'm not quite sure why you need to know whether or not I know him, because I have no idea who he is. Oh, Cobra King, how are you doing today? One of the greatest value investors. Okay, Pegasus, let me ask you a question. Did Mr. Graham make a consistent 50% or more every single year for 15 years? Kind of just curious. Just curious. And there are a lot of traders out there. Some traders I know I could probably suggest to you, and you probably don't know who they are. Anyway, let's keep on keeping on. All right. So that being said, let's do a quick trade, quick covered call trade. Nobody does. That's why Warren Buffett has bet everyone on the planet to bet him. Yes and no. Unfortunately, Pegasus, okay, I've only started sharing what I'm doing because I used to do it privately for myself. I know him, but he doesn't know me. So I've been trading since the late 90s, okay? And I've had some good years, I've had some bad years. But it wasn't until 2008 when my daughter said, can you teach me? Well, I came up with this strategy, and this strategy is so predictable and so consistent, I just don't do anything else. Because I got to a point in my life where 1% return every single week is perfectly fine for me. Think about it. If I have $100,000, 1% a week is $1,000 a week. For 10 or 15 minutes a day of my time, 1 hour a week, $1,000, I'm perfectly okay with that. Now I have 7 accounts. I share 3 of them with you guys. That being said, glasses. Damn it, don't get old. It's no fun. Right there. And I want to go here. That's 2024. You don't want to see 2024. You want to see 2025. Okay, so here's 2025 right here. All the trades. You can take a look at each and every single one. Every single trade I do this year in the 3 accounts that I share publicly are available on the webpage. You can go take a look at it. Now, recently, I came up with an epiphany for a spreadsheet that should be freaking awesome, and hopefully that will be done in the next week or 2, and that will also be available. Put $1 million on it. Okay. Thank you, Pegasus. I'm not quite sure that's going to do anything. Nobody wants to hear what I have to say. Because at this moment in time, I'm still a nobody. Because Warren Buffett didn't become Warren Buffett for, 10, 15, 20, 30 years into his career? Okay? I'm in, year 2? That's it, year 2. Mr. Nice Guy. So you get 1% a week on selling covered calls. That requires owning 100 shares, yes or no? Yes, that does. Now, you do also realize, Mr. Nice Guy, there are companies that have weekly options, okay, that are $1, $2, $3, $4. So it all depends on where you are in your life and how much money you have to play with. Okay, my grandson started out with $50. Well, he's 5 years old. What do you want a 5-year-old to start out with? Okay, so let's keep on going. Let's do this one, and then we can progress forward, all right? So at this current moment in time, the very last trade was 31.45. I'm going to put an order in to buy it first thing in the morning at the market price at the opening price. Okay. Also, I am going to sell the 31.50 as soon as the market opens also. So 31.50 right here. Okay, I'm just going to do one contract so you get the gist of what one contract is. And market order, there we go. And here we have it. Here's the order, how it sounds and how it looks. Buy one covered call, Advanced Auto Parts, 100, that's the weeklies, 9 May 25. That means that option contract ends or expires at 3:59 p.m. on Friday. Not really. They expire on Saturday, but after 3:59 p.m., it's 4 o'clock, and the market closes, and you can't do anything. So all options expire on Saturday, but for the purposes here, it ends at 4 o'clock on Friday, because after 4 o'clock, you can't do anything. Okay? Just, in case there are out those nitpickers who want the I's dotted, T's crossed, and all the punctuation perfect. Me? I don't care. Anyway, the $31.50 call option against AAP stock at the market to open to open. Now, the reason why it says to open, no, I don't stutter. You're doing 2 trades at once. A covered call, you're buying the stock to open a trade. And simultaneously, you're selling an option to open an option contract. Mr. Nice Guy, do you ever get tour shares called doing this? Oh, your share? Yes, once in a while. Very rarely. I think this year, since January 1st this year, only one time. One time I was exercised, that's it. No, wait a minute. In the accounts I share with you, only one. I do have other accounts where they do get called away all the time. I specifically designed it that way so I get that income going. Roll, baby, roll, KG, what's happening? You can follow them back. Okay, all right. P.S. Limey. Okay, P.S. Limey. All right, whatever. All right, so there's a couple things you want to look at. The green line, that's the order itself. Read it out loud to make sure you're doing it right, because most beginners, and don't think you're an exception to the rule, because almost everyone does it. I've been trading over 20 years. I do it myself. Matter of fact, a couple of months ago, I actually did it. What is it? Hitting the wrong button. Most newbies, most people just starting out, and even some of the seasoned people, will at some point in your life hit the wrong button. Well, let me give you a little free advice if and when that happens. As soon as it happens, and I'm talking as soon as it happens, you pick up the phone and you call your broker immediately. Because as soon as that phone rings at the broker's, it is time-stamped. They know exactly when you called. If you can call them within less than a minute or two, they will reverse it for you most of the time. If you wait 3, 4, 5 minutes, they ain't going to do it. So if and when you hit the wrong button, and you will, don't think you're above it, because there's not a single person I've met so far that says, yeah, I've been trading for years. No, I never hit the wrong button. Yeah, we all do. What platform do you use to trade? Think or Swim. Okay, it's through Charles Schwab. Luke, oh, nice to know. I've always eaten those losses. Yep, you don't want to do that. Luke, anytime, just immediately give him a call. And be nice about it. We got a question over here. Steven, to the meeting group. Uh-oh. I didn't see that message, Steven. What was it? Uh-oh, what was it? All right, I don't know. All right, Steven, if you got a question, just unmute yourself and just spit it out. All right, so let's keep on going. So this is the trade, a covered call. It's one of the simplest, safest, most predictable trading strategies there is. Maximum profit. I know the profit I'm going to make before I even do it. Consistency, every single week. 9 May, that's this Friday. 16 May, that's next Friday. So if the stock doesn't get called away from me this week, I will roll it into next week and do the exact same thing. And I will do it every single week until it hits my target. Okay? Now, I will. Seriously. I've done Kimberly-Clark for 9 months. Every single week for 9 months. I collected 3 dividends and about 35 premiums every single week. Most people just buy a stock and collect the dividend 4 times a year, for the most part. Well, why not sell a covered call against it and increase your rate of return? Increase your cash flow. It's simple, it's safe, it's predictable. You can get your broker to walk you through it if you don't trust me. Matter of fact, don't trust me. If I say something, write it down and then cross-reference it with other people. Never trust someone blindly on YouTube or on the internet. That's why everybody I work with, I insist that we meet face-to-face, eyeball to eyeball, shake hands. I know you, you know me. Other than that, I don't want to work with you. Okay? I'm just here helping information. Darian, delta and theta. Yep, hold on. Do you think people should do this or invest in index funds? Okay, Goku, cool name, by the way. Everybody is different. Okay, if you don't have the time or desire to do it yourself, put it in index funds. Fine. I don't do index funds, but the returns are horrible, in my opinion. You get two choices. At the point I'm in, I'm retired, so I get two choices. I learn it, do it myself, or I hand it over to someone else and they do it for me. Well, I've talked to many financial advisors, many. Not a single one has ever shown me anything that gets consistently over 30 to 40% every single year. So now I do it myself and I get 1% a week. That's over 50% a year. You guys do the math yourself. I'm asking you if you think most people can do this and win. Well, Goku, yeah, you can, but I'm not telling you to do it. I'm telling you, if you have the interest and do it, the possibility is there. They have what's called paper trading. It's kind of like Monopoly, but for the stock market. Okay? It doesn't take that long to figure it out. And especially with paper trading, if you make a mistake, you just hit reset. You can't do that with real money. Never, ever, ever put real money on the line until you know what you're doing. Kahi, yes, you keep the premium. So you still get 1% return even when 100 shares are called. Absolutely. You get the one. Okay, hold on a second. I'm going to show you something in a second. Luke. Hold on a second, Luke. Luke, the force is with you. Can you show us your annual returns? Yes, I can, but I ain't going to because I don't know you. This is the first time you ever got here. I have no idea who you are. Hey, weren't you paying attention like 2 seconds ago? 2 seconds ago, here's my trades right here. This is 11 April. Okay, the week of the 11th, which is, come on. Okay, week number 15 of the year, April 7th, April 11th. You can look at each and every single one. These are every single one of my trades. If you know anything about math, you can figure it out yourself. You click on one right here. Okay. I sold 22 contracts, Harley Davidson, 10 cents a share. That's 220 bucks. 35 contracts at Kohl's at 5 cents. What's 5 times 35? Oh, crap. I need a freaking computer for that one. What? There we go. All right, just put it over here, right there. Here we go. Clear that, and let's try this one more time, okay? Harley Davidson, 22 contracts, 10 cents a share. That's 220 bucks. So I get 220 bucks, okay? Plus memory, clear. Okay? Memory recall, 220, okay, clear. Next one, 35 contracts at $5 per contract. 75 bucks. Okay. Clear that. Next one. 20 contracts at 5, that's 100 bucks. Plus memory, clear that. 80 contracts at 5 cents. Okay. 80 times 5 equals that 400 bucks plus that. Okay. That was that one. 55. Uh-oh, wait a minute. Nope. Because we got 55 and 25. That's 80. 80 contracts at 6 bucks. Hold on, we're getting there. 80 contracts at 6 bucks. That comes to 480. Add that there. That's that one, that one. Okay, 7 contracts Macy's, that's 16. So 16 times 7. 112. Plus memory, clear. That is that one there. Okay, 8 Macy's times 16. Okay, 16 times 8 equals 128. Plus that, okay, there. That's that one, that one. Okay, Kohl's again. 35. Oh, nice. Take a look at that one. 35 contracts at $12 a contract. Okay, so 12 bucks multiplied 35 contracts, 420, okay? Now 80 contracts, okay? 80 contracts times 8 cents a share, or $8 per contract. So 80 contracts multiply $8 per contract is 640 plus memory recall. Right here, just these trades right here. Just these, not anything else. 2,675. That's just the income from the premium just on those trades right there. Every single week, every single position I own, I sell a covered call on it every single week. TikTok, tell me, how you doing today? Joey, hold on a second. Mamas. Okay, hold on. Yes, you keep the premium. Absolutely. Hello, looking good today. Thank you, Basha. I like the shirt. Thank you. Fadlin 87. Okay, I don't understand that at all. Sorry, kiddo. Basha 175. Quick math. Thank you. Thank you, Michael. If you don't know Benjamin Graham, that tells me what I needed to know. Bill, I have no idea what that means. All right, James, do you agree with 100 contracts? Because some of it I do could be monthly. Bill, I don't know what you're talking about, and I feel bad about that. Okay, I know, I think you should be Intelligent Investor. It's a really good book. Oh, yeah, no, thank you. Because see, the funny thing is, Bill, okay, I'm what you call a Gen Xer, okay? I have a very firm belief that if it works, leave it alone, okay? If it ain't broke, don't try to fix it. It works fine for me. I have no desire to learn anything else. I have no desire to read anything else. I have other things to occupy my time. Now, if I read that book, it's not going to change my trading strategy because my trading strategy works for me. Okay? And I hope that's okay. The comments felt like tongue twisters. How much capital for all these trades? Joey, hold 1 second. Joey. Okay, I'll put my glasses on for this one. All right, Joey, you ready? Remember I said I have 7 accounts and I share 3 of them publicly. Account number 1, account number 2, account number 3. The beginning of the year, January 1st, 151. Account 2, 143. Account number 3, 114. Okay? So look at the returns so far at the moment in time. 47.4, account number 1. Account number 2, 33.2. Account number 3, 48.8. Now we're into May, which is week 18. Week 18, and I already have these returns so far. So you can go all the way back to January 1st. It's actually January 1st. It was December 30th was the first of the week. Okay? 152,000. These trades came up to 152,000. To buy all those shares and to sell all those covered calls was 152,000. So how much did I make off that 152,000? I made 9,341 doing nothing but covered calls. Okay, look at it right there. Okay, I rolled over U.S. Steel, $1.58, 10 contracts at $1.58. You have any idea what $1.58 and 10 contracts is? That's $1,500. Okay, 1,500 here, 1,500 here, 16, 19. So another 148, another 148, another 1,500, another 1,500. Well, that one's only 150. But these are all ones just for this week, just for the first week of January, and then the next week of January. Okay, so week 1 of January, 6.1, 1.8, 4.2, 1.8, 1.7, 2.3, 4.8, 3.6, 1.8. They're all there. You want to take the time and take a look at each and every one? Fine, be my guest. Go ahead. Okay, let's get back to our trading. You guys don't want to see all this. All right, so that's that one. I like that one. Wait a second. We didn't do the math. to figure out the math, what your rate of return. Now, for those of you who've never seen it, let's check it out. Maximum profit, $76.50 per contract. You get one contract, you get $76.50. Two contracts, $76.50 times two. Okay, it's really actually that simple. Two objects that are the same shape. Unable to verify. Okay, try this one. 8 and the 8. I hate this stupid thing. You have to get it right smack dab. Thank you. All right. Pretty great stuff. Thank you, James. Mr. Nice Guy. 1% returns mean that you would have to have 10,000 to make $100 a week. Yeah, Mr. Nice Guy, that's exactly what it means. If you're up 9,000, starting with 150,000, that would be only 6% on the year so far. Randall Ray. Randall Ray, hold on one second, because apparently, Randall, your math is incorrect. Okay? You ready, Randall? We're going to just stick with account number one. Okay? Just account number one. Profit, week one. Okay? Week one, quarter one, December 30th to January 3rd. That's the very first week of January. 9,341. Week two, 3,741. Week three, 7,947. Week four, 3,966. Week five, 6,706. Week six, 5,354. Week seven, 2,728, so on, so forth, over and over and over again. Okay? So, as of this moment in time, just for your curiosity, oh crap, I didn't get the profit in there. Okay, so I started out with 151, January 1st. Now the account is at 219. That's a 47% increase. Add them all up. Okay, let's keep on keeping on. Let's get out of here. Let's get this math done and over with. All right. Clear. All right, so we're going to take the maximum trade, maximum profit, $76.50. Put it into the calculator. $76.50. Now, what is it costing me to do that trade? Because in order to make a profit, you have to buy something and sell something. Okay, so I'm buying the stock. It's costing me $3,074 to buy the stock. All cash. Okay, that's a cash account. Hold on a second. So I divide that $76.50 by 3,074, 3,074, and it comes to a grand total of 2.4% for 3 days. Because this option here for 9 May, the 31.50, well, the stock is at 31.45 at the moment. Okay, so it doesn't hit 31.50 this week. Big deal. I still own a good company. Remember rule number one? Never buy something you don't want to own for the rest of your life. If you don't like it, don't buy it. It's that simple. If you don't understand what they do, don't buy it. Oh, wait a second. I didn't go over the 5 rules, did I? I'm just remembering. Sorry, didn't go over the 5 rules. Here we go. Ready? Rule number one, never buy something you don't understand or you don't want to own. That's rule number one. Rule number two, never sell at a loss. It defeats the purpose of the whole game. And it is a game. Don't kid yourself that it ain't. Rule number three, make sure the company you invest in is consistently profitable. That's number three. And I can't emphasize it enough because you are going to be surprised at what people and where people put their money in. What stocks they buy. It's like it boggles my mind. Okay? What was your first buy ever? Oh my God. Honey, that was back in the 1990s. Okay? I'm in my 60s. I can't even remember what I had for breakfast 2 weeks ago. And you want to know my first trade ever? Sorry, hon. I can't give it to you. It was that long ago. Okay? You probably weren't even thought of in the 1990s. Anyway, where was I? I forget where I was. I had that, what do you call that? Attention attention deficit disorder. Okay, Wolf, we'll take a look at it. Look at KMB, Kimberly Clark. We're looking at Kimberly Clark last night. Yes, Kahi, I know 1% a week is 52% a year, but that's simple interest. If you compound it, it's over 64% a year. We'll touch on that a little bit later on. Okay, so this particular trade that I'm showing you right now, Advanced Auto Parts, buy at the current price, $31.45, sell the $31.50, pick up 76 cents per contract. That's 2.4%. But hold on, I got something else interesting to show you. Can you explain on leverage? I was just about to do that, B. I really was. Here, it shows you the cost of the trade, including commissions and fees, $3,074. If you have all cash. Well, I've been doing this long enough. I have a margin account. Let's calculate it on margin. That's the price right there. The buying effect, $1,498. That's $1,500. So I didn't have to spend $3,074. I only put up $1,500. So let's see what that number looks like. The profit is still the exact same. $76.50 divided by this price right here, the buying effect, because this is a margin account. And I always tell people, never, ever, ever do a margin account until you understand the risks involved. Okay? It's great if you understand the risk and you know what you're doing. That's why I tell people, take your time, paper trade for a long time until you understand it. So we're going to do this on margin, $76.50. Let's divide it out and see what rate of return that is. 1,498. 5.1% for 3 days. Now, do you have any clue whatsoever what 5% per week would be over a whole year? Well, that's a nice return. Okay. Hold on. I got some questions here. Nice guy. I'm not sure 1% return is enough to have it to pay the IRS. All right. I'm Joey. Who said that one? Mr. Nice Guy. 1% a week. That's over 52% a year. Randall Ray, he makes 1% every week. I'm not sure where you got the 6 per year from. I have no idea where you got that from either. All right, Michael David, he does want the shares sold through the covered call. If not, sold them through a covered call next week. Yeah, just keep 1 week after another. Wolf, we'll do EMB later. Can we look at KMB, Kimberly Clark? I'll write it down. Might not get to it today. Because do you ever gamble with equities? No, Elliot. Every single trade I do is calculated. Every single trade I do it with the intention of holding it for the rest of my life. And I do a covered call every single week. If it hits my target and it's no longer profitable, I'll let it go. As a matter of fact, I think I'm letting go Delta Airlines this week. Because I think I bought it at a certain price and it jumped up so much, it's not financially sound for me to roll it forward anymore. The numbers just don't look right, so I'm just letting it go. There's already a profit there, so just take the profit and move on to the next one. Joey, what delta you sell the puts and delta, and what delta do you sell the call? Okay, so Joey, here's the thing, and somebody over here on this other channel asked about it also. The delta, the vega, all that stuff, I don't even look at it. Because you missed the part where I said this was created for a 9-year-old little girl. Trying to explain the delta, the vega, intrinsic value, Black-Scholes pricing methodology for standardized options. Yeah, it's like right over your head. Okay? Simple, safe, predictable, and consistent. No complexities whatsoever. So no, I did not try to explain the delta or the vega or the pricing option strategy for standardized option to a 9-year-old. Okay, B, because if you don't have the money in the bank, if it goes to zero, what happens? Okay, number one, B, you shouldn't be trading with margin if you're asking a question like that. Okay, if you ask a question like that, do not do margin. Only risk or only invest the money once you understand everything that goes along with it. For example, a loss, and it drops. Okay, B, If you do not understand the stock market, you shouldn't be investing. Almost every single stock has a 52-week high and a 52-week low. And if you're not ready for the 52-week high and 52-week low movement, which can be 50 to 60%, that means you can buy it at $100 and it can drop down to 20. If you panic and sell, then this is not a game for you to play. Never ever buy something that you do not want to hold on to for the rest of your life. If it drops, don't get rid of it. Okay? Keep selling covered calls every single week. Have cash flow coming in every single week, regardless what the stock does. I'll give you an example. Perfect example, as a matter of fact. Let's go back to there, go back to here, go back to there. Okay. HOG, Harley Davidson. Okay, here's Harley Davidson. Now, I backed up Harley Davidson all the way into October for a reason. I jumped into October, but I just gave it away. I jumped into Harley Davidson in October at $35 a share. I get $35 a share in one account and $35.68 per share in another account. Look where it is now. It's at 23. I'm not panicking. I'm not selling. Here's the reason why. As the stock price drops from 35 all the way down to the bottom, which is like 19, I didn't sell. Okay? I sold covered calls 2 to 3, maybe sometimes 4 strikes out of the money. Let me explain. Here, let's get rid of this. We don't need to see that. This is the option pricing, stock option pricing right over here. Now, over on this side are the call options. Over this side are the put options. Okay, I don't deal with those over here. Don't even ask. I'm not going to teach you those. These over here, these are the call options. This allows someone to buy at a certain price at a certain date. I sell them. I do not buy them. Okay, there's an old saying. Hold on, get this right there. Okay, 80% of all options expire worthless, so I do not buy them. I sell them. I buy the stock, I sell the option. So work with me here for a second. I bought it at 35. Now it's at 23. Okay, this week I sold the 24.50s. Okay, and I got 1% at the beginning of the week. Well, now the 24.50s are down to 5 cents a share. Not worth it now. But in Monday, it was. Monday, I was getting 1%. So as she's dropping, okay, this line right here, it separates the purple from the black, these numbers, that is at the money. The purple, that's in the money. The black, that's out of the money. So as the stock drops, the value of the option decreases. So from 35 to 24, well, the 24s were going for 35 cents a share. Well, that made sense to me because I bought it at 35. That's 1%. Last week, I probably done the 20. Wait a minute, I probably done the 20s, 2s last week. Before that, it was the 24s, the 25s, the 27s, the 20, so on and so forth. Every single position I have brings in something every single week. Other than that, it just doesn't make sense. Ethan, thank you for that. You were at the delta and the theta, yeah. Oh, look at that. Ah, cool beans. All right, so you want to see the biggest scan ever on the stock market. Look at Mullen. Yeah, no, thank you. I never even heard of it, so no. All right, Michael, thank you for that. Elliot, where should I start? Elliot, the very first place to start is believing that you can. Okay, I'm actually getting ready to come up with a new trading strategy specifically for people who know absolutely nothing. And I have a perfect candidate. She knows absolutely nothing. Her husband died, and she had no clue how to take care of all of her finances. She had to figure it all out herself. Okay? So from absolutely nothing, we're going to take her on a journey. You guys can follow along if you like. Ask every single question you can possibly think of. How do you get started? First way to get started is to believe that you can, because this is something you probably never heard of before. Okay? When's the last time you heard of a weekly cash flow or weekly rate of return? No, it's always annual rate of return. Always. Okay? APR, the annual rate of return. Annual rate of return. Annual percentage rate. APR, annual percent. Yeah, whatever. All right. If you don't look at delta, can you explain how do you determine strike price? You sell the covered calls at. Oh my God, Joey, I can't believe you just asked that question. Seriously. Watch this, Joey. All right, you ready? Joey, you ready for this? Because you're going to feel awfully silly. You really are. Okay. If the bid is the price you can sell it for, if the ask is the price you can buy it for, I'm talking about the stock. Okay. Hold on. Let's do this. All right, that a little easier? This is this information on the stocks. Just the stock, that's it, nothing else. Okay, the last trade, the bid, the ask, the volume, the open, the high, the low. That's for today. That's actual real data from this afternoon. Okay, great. Well, the opening price, 23.13. The high of the day, 23.90. The low of the day, 23.08. The close of the day, 23.31. If I want to sell my stocks, I'm going to collect $22.40. That's the bid. If I want to buy it, Joey, you ready for this? If I want to buy the stock tomorrow morning, 24.49. 24.49. Now, how do I figure out what option I want? 24.50. That's it. 24.49. I'm going to sell the 24.50. That's it. Whatever option is the closest that makes the most sense. It's actually that simple. If the stock price is 24.49, well, I want to do the 24.50. Simple. Now, a little silly now, isn't it? If the stock price is $20.02, I'm going to sell the 20s. If the stock price is $99.95, I'm going to sell the 100s. Whichever one is the closest, whichever one is going to give me 1% rate of return. Simply, safely, and predictably. That's what I'm looking for. All right, let's see what other questions we have. Questions. May not understand what you're asking. Joey. Okay, no, don't look at the delta. Bill, James, do you agree with centimeters? Oh my God, Bill, stay on target, please. Thoughts on Rivian? Ben, Rivian is not 20 years old. When I say two decades, that's 20 years. Okay? Delta, it's just a guess. Where it ends up in the money based on the delta is BS. Guess. Thank you. Thank you, Michael. All right, where were we? Kevin, why did you go so many strikes away from in the money on Hog? Why? Kevin, because I bought Harley Davidson at 35. If I sell the 35s, it's worthless. Hold on, where is it? Okay, I'm in Harley Davidson at 35. The $35 option for this week, 0. Okay, go follow all the way up. All the way up to 25 is 0. Those things are worthless. Why bother selling them? There's no money there. So 1 strikeout, 30 cents a share. 2 strikes out, 15 cents a share. But this only has 3 days left, so it doesn't make any sense to do this week's. Next week's, which is right there. I don't want to look at all, and that's way too much. Okay, so next week, okay, I will probably sell the 24.50s again. It's going from 25 to 35, or I might do the 24s. 40 to 50. It all depends on the flow. Now, what do I mean by the flow? Well, we buyers and sellers, we create what's called flow. What direction? Or you could call it trend. Is it going up? Is it going down? Where is it going? There's a lot that goes into it. Very simple. Okay, so let's go back to the chart. Okay, so here's Harley Davidson. The high, the low, where was it? Where is it? What direction is it going? Simple. Down, up, down, up, down, up. Simple, right? Why complicate it? This strategy was created for a 9-year-old. I like to think, okay, that most of you understand it, right? So that's 1 year. A year ago, we're at 35.59. The high of the year, 39.88. The bottom of the year is 20.35. Okay, so the last 30 to 90 days, which is the last 3 months, I'm looking for the exact same thing. Every time I look at a stock, it's always A plus B equals C. Okay, A is, what's the chart? 5 things, you ready? High, low, was, is, direction. Down, up, down, up, down, up, down, up, down, up. Okay, what's going on here? Well, let's zoom in a little bit closer. Because the 90-day chart, which is the last 3 months, gives me an idea to look at patterns. Is there a pattern? Yeah. Down, up, down, up, down, up. They're closer together. They're not really far apart. So within the 3 months, 1, 2, 3, 4, 5, 6, 7, 8. 8 movements within the, so I'm looking for a pattern within the last 3 months. Fine. From there, I want to look at the 30-day. Okay. Here's the last 30 days. The same thing. High, low, was, is. Look at the movement. Down, up, down, up. What's going on here? Don't really know. Okay, because it's not really prevalent. It's not really, it doesn't really stand out like a sore thumb. Okay, this you can tell is going up. This is going down. That's going up. What happened today? Yesterday was higher than it was today. So today she pulled back a little bit. Well, that works for me. Now I decide, well, what's going to happen tomorrow? What's going to happen Thursday? What's going to happen Friday? On Friday, I take everything that happened, Monday, Tuesday, Wednesday, Thursday, and then I decide, do I keep this stock? Do I let it go? Do I roll it forward? Do I let it expire? Do I let it get called away? Can't answer the questions of Friday afternoon with the information I possess today. Just can't do it. I got to wait until Friday afternoon, right around 2 o'clock. That gives me enough information to decide what am I doing with this position for next week. I need the fan on. Let's get a little warm in here. All right, there we go. So hopefully that makes sense. And no, I did not try to teach a 9-year-old about the Greeks. It just didn't work. Okay, she's 20. Oh my God, how old is she now? She's going to be 26 this year. Still ain't going to try to teach her about it because you don't need to know. Why learn something you don't need to know? Seriously, here's a good one for you. Somebody once asked Albert Einstein, excuse me, sir, how many feet are in the mile? So Albert Einstein said, my dear boy, why would I waste the space in my head for such trivial information that can easily be looked up somewhere else? Think about it. It kind of makes sense. Why should I learn something that has nothing to do with what I'm doing? So yeah, I don't know that guy. Terribly sorry. So might 1x. How often do I get the stock called away? So from the beginning of this year till today, the three accounts I share with you, nothing got called away. Nothing. But I do have an account on Robinhood where I specifically set it up for stocks to get called away. Finest Bishop, how are you today? All right, let's keep on keeping on. All right. Silverman, how are you doing today? If not called away, something like call. Cool. Kate, thank you. Kate, I know absolutely nothing, and I would like to join. Kate, I'm here every single night. You are more than welcome. I insist you ask as many questions as you need. Very first question you should ask. As a matter of fact, the first question everyone should ask. And it's a doozy. You ready? Very first question. Does it make sense? Think about it. If I'm buying Harley Davidson tomorrow morning at $23.31, that's the price I'm paying for it. The closest strike price to $23.31 for next week is going to be the 23, and that's going for 85 cents a share. The 23.50 is going for 60 cents a share. The 24 is going for 40 cents a share. The 24.5 is going for 25 cents a share. Every single one of those is over 1%. Well, I'm terribly sorry. Harley Davidson, it's an American icon. They've been in business for over 100 years. They are known almost worldwide. Almost. But do you like the stock? Is it the right time to buy? I would say it's not the right time to buy because the bottom's here. Now we're here. So from 20 to 24, yeah, that's a $4 increase. Now I know a $4 increase doesn't sound like a lot to some of you, but a $4 increase on a $20 stock is 20% move. And if you're thinking 20% move is great, I'll just wait for it to go higher. It doesn't work that way because you got people like me and some of you people in the audience. 5% profit, 10% profit, I'm taking it, I'm out of there. What happens? Stocks come down when people start taking profits. Okay? Jump in, get your profit, jump out. Wait for the move again. Because what's going to happen? It happens every single day. Okay? Stocks go down, stocks go up. Stocks go down, stocks go up. They go down, they go up. They go down, they go up. They go down, they go up. That's all they do. They go up, they go down. That's it. They don't do anything else. If you like a company, watch it. She drops down, look for the bottom. As she finds the bottom, I like 2 days to the upside. Then I jump in. If the third day is not an up day, I won't do it. Okay? It had to be a simple, predictable strategy for a 9-year-old. You want to know the main reason why? Because if she wasn't profitable and she lost money, yeah, mama gets involved and daddy's sleeping on the couch. Yeah, no thanks. Simple, safe, predictable, consistent, no way for her to lose. That's what the strategy was for. And no, I did not try to explain to her the Greeks. I did not try to explain to her implied volatility. Simple, safe, predictable. Rule number 1, never buy something that's not on the list. That was for my daughter. For you guys, it's never buy something you don't want to own. Now, for my daughter, when I say not on the list, there's the list right there. Okay? Every single one of these green dots is what is called an EX dividend date. We all know that's a calendar. Okay? May 2025. Okay? May 6th, that's today. Each one of these little dots represents a company. And you probably heard of many of them. There's a Citigroup, Eaton Electric, Baxter, LVS, that's Las Vegas Sands, MET, Metropolitan Life Insurance, CVX, Chevron, PSX, Phillips 66, SO, Southern Company, PPG, Apple, Ford. You probably heard of all of them. This is my list. If it's not on this list, it's a no. I check every single week. This week, 10,016 different companies. You want to figure it out? Fine. Have at it. Me, Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, and Warren Buffett's list. What do they all have in common? They're all consistently profitable for at least 2 decades. That's 20 years. That's the only ones I want to invest in. Because my money, I want to make sure it's going to the right place. Now, remember when I said rule number 3? Make sure the company's consistently profitable. It will really boggle your mind some of the crap you people put your money in. Now, I'm not pointing to anyone in particular, but as the night progresses, we will see stocks and we will say, why the hell did you put your money there? Seriously. I get it every single night. There has not been a single night where someone didn't pick something that I thought to myself, what the hell is this guy thinking? Okay, let's keep on keeping on. Kate, now I'm going to tell you guys something I tell everybody every single night, okay? I don't do cryptocurrency. I don't do futures. I don't do Forex. I don't do quick, what do you call those? Smart contracts. Okay. I don't do Telegram. And I don't do, what's that other one? WhatsApp. If you want to talk to me, I say this every single night. If you want to talk to me, send me your phone number. Make sure it's a US number. Okay. I will call you back. We'll have a nice conversation. And I can guarantee you one thing, and you can ask in the chat. I guarantee you I will not try to sell you anything. You're all adults. You know if there's value there and you want to pay for it, fine. Pay for it. If you don't want to pay for it, well, you don't get it. It's plain and simple. But I promise you, I'm not going to try to sell you anything. Seriously. I'm not going to give your number to someone else. I'm not going to put your phone number, your email onto some kind of random No, I don't do those kind of things. Okay? I run my... This is kind of like a hobby for me. It's not a business. I run my hobby as if I was being treated that way. I don't try to sell anyone anything. If you want it, fine. Ask me. I'll tell you. Okay. Okay, Shelby, I gave you that answer. Ben Miller, thoughts on Rivian? Yeah, no. I really don't care if it's getting ready to boom. Okay, and the reason why I say that, Rivian is not 20 years old. There's over 10,000 different companies that we can invest in. Rivian just does not fit. Okay, Coralia. Good evening, Coralia. I have 100 shares of Amazon, so I can sell a covered call. Yes, you can. What other questions? Kevin, I have to write everything down with Thinkorswim. It doesn't give me enough of my trade information. Kevin, I'm not quite sure what information you need that Thinkorswim is not giving you. Joey, if you sell put that close to current price, you Muse be getting assigned every put you sell? I don't sell puts, Joey. Robert, good evening. Michael, why sell lower than bought to get some premium if stock goes up and the money roll more than credit? Thank you, Michael. Ben Miller, 5280. Okay, but Ben, think about it. The question was, why would I clutter my mind with information that can easily be looked up? It's written down somewhere. That was the question. Why? Think about it. Why would I read a book from someone I have no idea who it is to improve my trading? I'm perfectly happy with my trading. I would prefer to sit, have a nice cocktail, and watch the birds and the bird feeder and the bird bath, or watch my plants grow. Is this Michael Berry? I have no idea who Michael Berry. Wait a minute. I think Michael Berry is some trader. I don't know. I forget. But I heard the name before. Kevin, so far all my options got called away. I feel like it's better and I know my profit. No, Kevin, you're basically right. Okay, I love it when my stocks get called away. If I buy a stock on Monday, sell an option on Monday, and it gets called away from me on Friday and Saturday, well, Monday I get all my money back and I do it all over again. Bill wants to take a look at Citigroup. Give me a second here, Bill. I got some more questions to answer. So all those things on the calendar and know-how. Okay, Bill, all these things on the calendar are companies that consistently increase their dividends. Okay? Just any one of them I'd be happy to own. But for my daughter, for my 9-year-old daughter, if it's not on the list, don't even bother looking at it. Simple. That's it. Now, she only did 3 to 5 trades a week. That was it. Duke Kodak, A1 stake. You actually got to give me the ticker symbol for Kodak because I don't trade it. And Antoine sent 1 Ethereum to Elon Musk. He didn't send 2 back. I have no idea what that means. Antoine, I just jumped in nilly-willy and started doing covered calls. Using real money was great for me. I panicked and sold several times. Antoine, we had that conversation before. But you know what? I don't tell people what to do. Okay? I don't tell people what to buy. I don't tell people what to sell. I do tell you what I own because I feel it's important for you to know that I'm not trying to sell you something or sway pricing and whatsoever. So I'll let you know. If I own something, I'll let you know. No sound on second YouTube channel. Uh-oh. Uh-oh. No. Oh, there we go. No sound. That might be better right there. I had to adjust the volume. Ribbon cars are garbage, and the stock is even worse. Thank you, Luke. I appreciate that. Why not sell a put if the stock meets your criteria? I just don't like the vibes of trying to encourage a stock to go down. It just makes me feel bad. And also, think of it this way. Basically, what you're talking about, is what he's talking about, is a cash secured put. A cash secured put is almost the exact same as a covered call. Let me explain. A covered call, you take a big fat chunk of money, you buy some stocks, and you sell the options. So you're putting money into the stock, you're getting an option, and then you're receiving cash flow. Well, a cash secured put, you're not buying the stock, but you are taking a big fat chunk of money, setting it aside to the equal amount of the stocks you're selling a put on. So if I'm going to do 2 contracts, I have to have enough money to buy 200 shares on a covered call. Cash secured put, I have to put enough money aside to cover the cost of 200 shares if I get put the stock. It's the same amount of money, but the returns aren't always the same. So I do take a look once in a while, and once in a while I will if the numbers work, and only if the numbers work, because it's a numbers game. Okay? I'm looking for 1%. Well, 1% every single week is over 50% a year. That's what I'm looking for. Okay, so Daniel wants to take a look at Mullen. Never even heard of Mullen, and I don't even know why we're doing it. So let's take a gander at Mullen. M-U-L-N. M-U-L-N. Fuck, Jesus fucking Christ. Ooh. Hell no. Come on, dude. Weekly options only. Companies that have 2 decades of profitability. Other than that, we're just wasting our time. If that is what you're looking for, you are definitely in the wrong place, brother. Okay, you're just wasting your time here because that's not what I do. I don't even bother looking at that kind of stuff. Okay, I'm past that point in my life. I like things simple, safe, predictable, and consistent. Now, no, if you want to do it, fine, you do it. But no, you're in the wrong place. Nana Terry, how are you today? John Gomez, Darren, fishing at crypto. Good evening. Diego, my eggs. Oh, Diego, my ego. That's funny. Okay, so A1 Steak wants to take a look at Kodak. Now, I think Kodak is a monthly. K-O-D-K. K-O-D-K. Yeah, no. Sorry, brother. I don't do monthlies. The numbers just don't work. All righty. Mohammed, what's the other YouTube channel for the TV screen called? The 10-MinuteTrader. It's basically the exact same channel that you're on right now. Because if you go to the bio, wherever it is on the screen you're on, go to the bio, and then you click on the live button, and they'll show you 2 lives. The one you're on now and the other one. Let me show it to you real quick, just in case. That's 2025. I don't want that one. I want that one, 2024. Whoop, nah, damn it. 2024 I wanted. 2024 has all of the social media. YouTube channel. Okay, we're going to the YouTube channel. Hold tight. Hold tight. Okay, see? Okay, live. I gotta change the title here. There's live today. That is just the screen. See, just the screen. And this is me standing in front of the screen. Okay, so there's 2 lives right now on YouTube. Actually, I think there's 3 lives on YouTube because I do have another channel on YouTube. Anyway. Oh, look at that. Andrew. Andrew just signed up. Cool beans. Thank you, Andrew. All right, let's get back to where we were. Take a look at some more stocks. All right there. All right. All right, back to where we were. Bill wants to take a look at Citigroup. Bill, it's about time you give me something halfway decent. Citigroup, here we go. You ready? Here's the high. Here's the low. Here's where it was. Here's where it is. Look at the motion. Okay, up, down, up. I don't have to count all this small stuff. We all see that. Okay, up, down, up. Simple, right? Great. Where is it now? Well, right now, it's not at the high of the year. It's not at the low of the year. It's somewhere in between. Great. Let's go to second. See, we got like 3 or 4 phases. Phase 1 is picking your stocks. Phase 2 is taking a look at when do they pay the dividends. Okay, Citigroup. Here we go. Currently, 69.47. So this is one of the tough ones, 69.47, because it's kind of between 69 and 70. So we're going to look at both. The 69 is going for 182. Well, we're losing some money, losing 53 cents. You take 53 cents off there, it's still over 2%. That's nice. That's over 2%. Okay, the 70, 129, that's over 1%. Okay, whichever one you prefer. It's a numbers game. Do the numbers. It's not that difficult. What am I buying it for? What is my profit? Okay, if I do this one here, my profit is 129 per share. So if I get 500 shares, well, 500 times 129, well, that's over $600. That's just the profit. And then you get to turn around and resell the stock again, and you get all that money back. I love it. It's a simple. Never mind. Sometimes I have no words for it. Oh, Muhammad, you see it now? That's amazing. Thank you. You're welcome. Free speech and other stuff. Andrew, freed of speech and other stuff. When I joined your group, I want to see extreme excitement from you. How big do you think Apple market cap can get? Luke, don't know, don't care. How's that? I honestly don't know, don't care about the market cap for Apple. I don't. I want to know. Let's pull it up. Wait a minute. We're looking at Citigroup. We'll look at Apple in a little bit. Do UNH in University of New Hampshire. Hold tight. Okay, high, low, we've seen all this stuff. It's going up right now. Is it too high at the moment? Well, let's find out. The current price, $69.47. So the 69 is going for 182. Great, that works. Let's look at the chart. What is the chart telling me? Is it telling me that now is a great time to buy? Hold on a second. Oh, Vegas tonight. I love it. Somebody always mentions Misty, Coney, and SCHD, SPY, what else? Crap. Nobody ever mentioned the diamonds, though. Okay, so Vegas tonight. Money, I'm here. Cool beans. Okay, so Vegas tonight. Do me a favor. Okay, I'm going to be right here. I'm not going anywhere. I'll be here until 11:30. Go to a financial website and show me or tell me how consistently, how many times in a row has MSTY, how many years have they increased their dividends to their shareholders? Okay, you find out that number, come back and we'll take a look at it. Other than that, I don't want to waste my time with Misty because I know exactly who they are. Money, I have 10,000. What can I do? Pizza party. Dude's having a pizza party. Let's go to his place. Woohoo! I can't tell you what to do. I have no idea who you are. I have no idea what you're looking for, so I don't tell you what you can do. All right, so what are we looking at? Citigroup. All right, let's take a look. A year ago, Citigroup's at 62.41. The bottom of the year was in August, 53. The top of the year was in mid-February at 84.74. Okay. From there, high, low, where was it? Where is it? Look at this. Down, up, down, up. Okay. From the beginning of April, she started this upward trend. So here's a very, 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 very important question to ask yourself. Do you honestly think, honestly, if the bottom is here and it goes up, 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 do you think it realistically can keep going? Realistically, seriously, think about it. From 55 to 69. Okay, let's zoom in a little closer. Right there. There's the last 30 days. Okay? High, low is, look at the motion. Looks lovely, doesn't it? Look at today's price, look at yesterday's price. Today's price, lower than yesterday. Yesterday's price, closed lower than Friday's. And definitely on a downward turn. 2 days down. Is that definite? No, it's a possibility. But it does tell me I don't want to jump into this. Steven. Oh, Steven, I can't. All right.
Yeah, I was just replying. He was telling me to use ChatGPT, but actually the other ones that I came up with tonight were MU and VRT. And those are a couple of them that I like.
Oh, I like MU. It's Micron. VRT is, was that VRT Strategies, I think? Let me write those down. We'll take a look at those in a bit. VRT and MU. I like Micron. I haven't done Micron in a while, but we'll take a look at it, so hold tight. Okay, so I'm going to say no to Citigroup. Only reason why is I don't like buying at a 30-day high. Other than that, I love the company. I do. Money, anything is possible. You're absolutely right. How can I buy a covered call on NVIDIA and PLTR? Lady Foss, I hate to be the bearer of bad news, okay? But I'm going to do it just for you because I like doing it. Ooh, Luke, Altria, love it. Chevron, love it. So Lady Foss, this is for you. You ready? NVDA. All right, Lady Foss, you ready for this? We're going to pull up some information on NVIDIA. Okay? Now, here's the historical prices for NVIDIA. At this moment in time, NVIDIA is going for $114.50. Okay. Let's look at the historical prices for the dividends. Okay? How profitable is this company? Am I reading that right, or does that say 1 cent? Okay, Lady Foss, you're paying $114 per share to collect a 1 penny dividend. 1 penny dividend. Hold on. It actually gets worse. Okay, go to statistics. When I say find a good financial website, I love Yahoo Finance. Statistics. Let's look at some statistical numbers on NVIDIA. Okay, might be enlightening. Are you ready? All right, you ready? Revenue per share, $5.31. $5.31 revenue per share. That means all the shares they have out there, only $5.31 per share is revenue coming in per share. All right, hold on. Book value, $3.24. So you're paying $114 for a $3 per share company. Now, what do I mean by that? Well, book value is calculated by everything the company owns, everything they own, against everything they owe. So if you were to liquidate NVIDIA today, you would get $3.24 a share. You pay $114 a share to buy it, but it's only worth $3.24. Imagine that. Okay? Now, do you see this number right here? Trailing annual dividend yield. Okay, you ready for this number? 0.03%. It's not even It's 3/100ths. 3/100ths of a percent. Okay? So you put in $114, you're getting 1 penny. That's all you're getting. How can you possibly tell me you want to put your money in here? It's your money, do whatever you want. Me? Hell no. The numbers just don't work. Okay, but let me show you something else. Okay? Okay, NVIDIA is not 20 years old. For me, it's a no. General Motors is over 100 years old. Okay, General Motors, 100 years old. $45 per share. $45 per share. Revenue per share, $175 per share. That's revenue. That's how much money's coming in per share. All right, so let's go down to the book value. $64.63 per share. That's the value of the company. So if General Motors liquidated, you get $64.63. Well, that's a hell of a lot better than NVIDIA, in my humble opinion. Palantir, no dividends, no thank you. Okay, NVIDIA, the dividend, they got a dividend. It's 1 penny. Yeah, no thank you. Check out the numbers. Oh, at least General Motors has a 1.06%. 1%, not 4/100ths. Yeah, no thank you. I always tell people, seriously, look at the numbers. Numbers don't lie. The number you're paying for per share on NVIDIA, you're paying for the hype. You're not paying for the value of the company. The value of the company is found within the numbers of the company. Are they consistently profitable? Okay, how much revenue do they have coming in? That's the actual value. Okay, yeah, they may have a bright future. Great, fine, dandy, wonderful. Not something I want to put my money in. But that's me. I'm totally different. I like safety. Safety first. Because if NVIDIA goes belly up and they have to liquidate, you're getting $3 a share. Yeah, no thank you. Okay, Bill, we already looked at Citigroup. Oh, what do I think about HIMS? HIMS? Yeah, no. Not enough dividend. You know what? Let's do it. HIMS. Revenue per share, $7, $49 stock. Book value is $2.46 a share. It has no dividends. See? No dividends, no thank you. Sorry. Oh, Lady Foss, you didn't know that? No, never ready. Yahoo Finance is the best, thank you. Yep, money, agree, okay. But everything is overvalued. No, it's not. Okay? Ford, General Motors, AIG, Bank of America. I got a whole list of stocks that aren't overvalued. You take a look at the consistency of profitability. Yes, but General Motors did not produce chips for AI. Okay, Lady Foss, I don't know about you, but I've watched 2010 Space Odyssey. I watched that movie. I've watched all the Terminator movies. Yeah, no thank you. I want to stay far away from that as I can. So which technology shares would you buy? I don't want to buy any of them because the numbers just don't work. Goku, General Motors didn't go belly up. Okay, they just what do they call it? Refinanced, recalibrated, something. So you only want dividend shares. Absolutely, because they're consistently profitable. Goku, GM is like investing in the past. Well, dude, I'm an old man. I like consistency and predictability. So you can share your list. I just told you what my list was. Oh, you never watched those movies? How can you possibly tell me you've never watched The Terminator? Oh my goodness. Restructured, thank you. The government bailed them out. Yeah, the government bailed out a lot of people. Can you compare General Motors to QQQ? Oh my God, QQQ is a piece of crap also. But let's take a look. QQQ. Historical prices. Hold on. We're going to take a look at the historical data on the Qs. Okay, and we want to look at, come on, dividends only. And then I want to look at all the dividends on the Qs, all of them, because the only way I can find out if they're consistently profitable. Well, let's go back to 2005, because like I said, 2 decades. All right, you ready? Goku. Oh my God. Snap 500? Hell no. Okay, Goku, you ready? Excuse me. Are you ready for this, Goku? Here we go. 2005. 3, 10, 2.9. Hold on a second. Did that just go backwards? From 10 to 2? That's backwards, dude. That's an 80% drop. From 10 cents a share to 2 cents a share is an 80% drop. Okay, hold on. It gets worse. Hold on. 2.9, 2.6, 2.3, backwards. 5, 2.7, backwards. 3.7, 2.6, backwards. 5.3, 3.3, backwards. 3.4, 2.8, backwards. 4.3, 4.9, 4.4, 4.1, backwards. 7.3, 5.1, backwards. I've said backwards almost more than I've said forward. Okay, Q is not consistently profitable. Take a look at the numbers yourself. 4, 7, 5. Okay, 4 to 7 is great, but 7 to 5 is not great. And then it goes from 5 to 8 to 8 to 11 to 10. That's backwards. Then from 10 to 7, that's backwards. Then to 12, then back to 10 again. Yeah, no. Up, down, up. There's no consistency in profitability at all. But hold on, Goku, it actually gets worse. You ready? Watch. Watch how much worse it gets with the Qs. Come on, we're going to summary now. The summary is going to give us some information that you might find interesting. Are you ready? The Qs, here we go. The yield. Now, I hope you understand what the yield is. The yield is a rate of return which you're getting for your investment. The yield on the Qs, 0.63. Now, 0.63 is not for the week. It's not for the month. It's not for the quarter. It's 0.63 for the year. So if you put in $100, you're getting 63 cents back. How can you possibly tell me that is a good investment? 0.63. Year-to-date daily total return, negative 4.81. How can you say that's good? All right. No to the S&P 500. Yeah, of course no to that. Who cares about dividends? It's coming out of the share price. No, it's not, dude. Goku. A dividend. Let me see if I can explain it to you in a manner you might grasp it. The very first dividend stock sold was the VOC. Okay, Dutch East India Shipping Company, back in 1602. Their promise to the investors is, we will give you a share of the profits. A dividend is a portion of the profits the company gives back to the investors. Can you show the 10-year price comparison? Nope. Don't want to, don't need to, don't care. Okay, simple. Don't need to, don't care. I don't care what it was 10 years ago, because there's no way on God's green earth can you go back 10 years in time and buy something in the past. You can't do it. Time travel doesn't exist yet. Only thing you can do is buy today and see what happens tomorrow, the next day, the next day, and the next day. Okay, I don't do that what do you call that crap? What do you call that? Back testing crap. No, I don't do that. I put money on the line. Is it profitable? Yes or no. Do I make my 1% every single week? Yes or no. It's simple. Either it works or it doesn't. If the company is a good company, I have no problem buying it. Okay, the Dividend Kings. They're 50, I think 57, 54, 57, 54 companies, I think it is, that consistently increase their dividends, their profits to their shareholders for more than 5 decades. A1 Stake. Luke, and shares buyback are better than dividends because you save the tax bill. Okay. Luke, I own a stock. I'm getting 4% or more in cash dividends for holding it. Otherwise, I index it. Okay, Luke, I feel bad if you're getting 4% a year. But hey, it's your money. You do what you want. The index has a little over 1%. I'm getting everything. I'm getting something every year. I am out. Just me. Okay, Luke, 1% a year. Hey, not a problem. That 4 dividends in 3 years. 4% dividend in 3 years. Dude, I double my money every 14 months. Every 14 months, I double my money. Okay, that's, oh my goodness. My goodness, some people, it boggles my mind sometimes. No. Okay, here we go. Now, who was saying that one? Luke. Luke, I am your father. Luke, all right, check this out. Luke, this is a weekly compound interest calculator. Weekly compound interest calculator. Okay, so let's put in $100. And then we'll put in $10 every single week. And we will look at 1% a week. That's what I'm advocating for, 1% a week. Okay? 10-year period, that $100 turns into $193,000. Okay, that's the beauty of compound interest. So you said you got 4% a year for 3 years. Dude, that's 12%. How can you possibly be excited at 12% over a 3-year period? That boggles my mind. 1% a week, that's 50% a year. Okay, within a half a year, I've already beat you. You have 3 years. I could do that in a half a year or even a quarter. What about Tesla and Amazon? Lady Foss, Tesla, no dividends. Amazon, no dividends. Okay, how can you invest in a company that's not consistently profitable? Amazon's not profitable. You can ask Jeff Bezos himself. It's not profitable. They take all the money and they reinvest it back into the company to give out better services. So they get a larger market share. So they get higher cash flow. They're not profitable. They don't share the profits. No, no, and no. Lady Foss, IBM, yes. AT&T, yes. Goku. All right. Are you telling me you'd rather would have had General Motors than QQQ over the past 10 years? Just clarifying. You definitely don't put words in my mouth, dude. Definitely would not do the Qs. I would do General Motors, but I do it on a weekly basis, okay? I don't buy and hold. I buy on a Monday and I sell on a Friday. Monday, Friday, Monday, Friday, Monday, Friday, 52 times a year. 52 times a year over a 10-year period, that's 520 times. If I get 1% every single week over a 10-year period, that's over 520%. I can guarantee you the Qs did not do 520%. And that's simple interest. That's not compounded. Okay? 52 weeks a year, 1% a week for 10 years, simple interest, not compounded, is 520. Okay, so for the fun of it, let's go back to here. Don't. Okay, $100. I'm not even going to bother. I'm just wasting my time here. Affects the share price. I encourage everyone to compare QQQ to General Motors and then decide if you agree with this strategy. Okay, fine. How many companies are you doing this with? About 300. Okay, there's 54 dividend kings. There's 67 dividend aristocrats. It's 150 right around 150 dividend champions. There's about 300 dividend contenders. And Warren Buffett's list probably has about 40, 50 companies. Those are the only ones I want to look at. There's 10,016 different companies. 10,016. Okay? The Qs have an average of 0.63% yield per year. Okay? I invest for weekly cash flow. 1% a week. General Motors, let's check it out. GM, 45.46. I'm going to look at the 45.50s. Okay, here, and covered stock, 45.50 right there. One contract at the market. Okay, my profit would be 101.50, and it's cost me 4,400 all cash, 2,100 margin. So let's do the math. 101 divided by 4,449 gives me a grand total of 2.2%. Okay, simple math. The profit divided by the interest of the investment. Sorry, the profit divided by the investment gives you the rate of return. Okay, so in this scenario, for this week, for the 3 days that we have left for this week, 2.2%. That's all cash. Let's see what it looked like on margin. Clear that. Still the same profit, 101. But this time, it's only costing me on margin 21.71. Okay, divide 21.71. That gives me a grand total of 4.6% for 3 days. Now, I like General Motors. They've been around for over 100 years. They're probably going to be here long after I'm gone. Now, would I buy General Motors as opposed to QQQ? Yeah, I would. Sorry, I would. Next, let's do the next. Let's get out of there. Get out of there. Let's get out of there. Let's get out of here. Whoops. Back to there and back to the beginning. There we go. All right. Luke, I'm retired. I don't like risk. Neither do I, Luke. Which would given you more? Okay, I don't do NVIDIA. Just don't even bother. Diamato, what do you think about Siri? I actually own some Siri. It has an EX dividend date on Friday. So let's take a quick look at Siri, because I do own some. SIRI. Here we go. Siri. Ooh, look at that. I like that. That looks good right there. Now, you might be looking at it and say, no, it don't. Here's the high. Here's the low. We're looking at two different things. Follow along and you will see. High, low. Where was it? Where is it? Look at the momentum. Down, up, down, up, down, up, down, up, down, up. Okay. Now, what do the numbers look like? 21.84. I'm going to be looking at the 22s. The 22s are going for 33 cents a share. Now, I don't know about you, but 33 cents a share on a $22 stock is 1.5%. 1.5% every single week for a whole year. Well, that is going to be a nice number. What the fuck is it? About 70%, something like that. 70% per year. I can deal with that. Let's break it down a little bit more. A year ago, we were at 31.75. The high of the year, 41.66. The bottom of the year was a couple of weeks ago, 18.75. So let's take a look at the last 30 days. That's not 30 days. There's 30 days. Now, what does that look like to you? The high, the low, where was it? Where is it? Look at this. Up, down, up. 1, 2, 3. 3 days to the upside. That, to me, is what I'm looking for. Goku, aren't you paying short-term taxes and all this? That has to hit your gains. Goku, I need you to listen very closely, because sometimes I think you don't listen. You can pay taxes if you want to, okay? If you're concerned about your taxes, go talk to a tax strategist or a tax planner. They will help you. They will help you set up your account so you do not have to pay taxes. All right? Seriously. Set up your account in a manner in which you have zero or minimal taxes. Because they're out there. You just need to pay for a tax strategist to help you along. What does that mean? Well, that means I don't pay taxes and you do. That's what that means. Now, I don't pay taxes because I have my accounts set up in a certain manner. So, profits of one entity offset losses of another. So if I have a bunch of companies that on paper have a loss, I can take the profits of one that are profitable and offset those. Or I can put into a family trust and I don't have to claim anything to anybody. Okay? Or I can put it into a nonprofit organization and all those profits are tax-free. I can give you many, many, many ways of not paying taxes legally. Okay? You trade in a Roth too? No, I don't have a Roth. I don't trust the government. I don't put my money anywhere where the government can get to it. How do I join to make money? David, keep showing up every day. If your profits go to a family trust, there's no taxes. If you have it set up right, don't misquote me, okay? I said something, use all the words in which I said. I said, if you want to eliminate or reduce your taxes, you need to talk to a tax strategist or a tax planner. Okay? Thank you, Teddy. Hayes. What's happening, Hayes? What do you think it's a good starter dividend? Okay, Hayes, I have no idea who you are. I really love to tell you something, but I would be doing you a disservice of saying anything. Anything at all would be a disservice to you because I don't know what it is you're looking for. I have no idea what your risk factors are. I have no idea what your time frame is. Okay, there's a lot of questions that go along with giving people advice. I don't give people advice. You ask me about a stock, I'll take a look at it. I'll give you my opinion, and I'll tell you whether or not I own it or if I would buy it. That's about as best I can do. I share all my trades. So if you want to see what I'm buying, go to the website and take a look. Every single week, I upload the trades that I made for that week, and I do the fancy little math. Oh, what did I make? What did I win? What did I lose? Blah, blah, blah. And then give you the rate of returns that I made for the week. I share everything on 3 accounts. That's it, 3. I got to draw the line somewhere. Do you like Guru Finance? Never heard of them. Do you own any long-term? The long-term, in my opinion, Mr. Elliott, the longest I've ever held anything is 9 months. And I didn't do it because I wanted to. Teddy, you were right on PLTR, by the way. I've been doing this for a while, Teddy, but I do appreciate that. Thank you. Luke, what happened to GM stock after the bailout in 2008? Did everyone get screwed? Probably. Okay, Luke, you do realize it's not 2008 anymore. Okay? You can't give me stuff from the past and expect me to equate it to what's happening now. It's just 2 different worlds. Okay, was I in the stock market in 2008? Yes, I was. Did I lose money in 2008? Yes, I did. I lost money in real estate. I didn't lose money in the stock market because I refused to sell for less than I paid for it. How do I join to make money? David, show up every day, okay? If you want, send me your phone number. I'll give you a call and we'll chat. Kevin, do I look at net liquid or positioned equity in Thinkorswim? All right, Kevin, net liquid basically means whatever the stock is at now, win, lose, draw, that's what you get. It's like a fire sale. Buy it now. Yeah, I don't do that. Okay, I bought Harley Davidson at 35. It's at 23. I have no intention whatsoever to selling it ever below 35. Never. Okay, that's me. I am different than you guys. You got to figure out what is right for you. Foot Locker was hit hard in 2008. Yes, it was. Okay, I didn't have Foot Locker in 2008. Isn't that weird? Ooh, A1 Steak. Why does my account say margin call? Means you spent more money that wasn't yours. Do you use harmonics? I have no idea what harmonics is, Moses. Yep. Oh, Florida real estate. Yeah. Yeah, I got screwed by someone that I thought I could trust. Okay. They panicked. I didn't. We bought a house at 130. I said it should be 235 when we're done. Guess what? They foreclosed on me. I lost a shitload of money. And what the fuck did she do? She turned around and sold it for the exact same price I told it would be, 235. I was right. She panicked. Yes, I know everyone did. All right, let's keep on going. Oh, look at this. We're almost done. Which money has value in the stock profiting? I have no idea what that means. Where are we? Do I own long-term? I don't own anything long-term. Basha. Kohl's. I got Kohl's. AEO. I don't have any AEO at the moment, but I did have it. And American Airlines. It's easy. There you go, Kevin. Do I look at net liquid or position equity in Thinkorswim? You look at the cash flow, brother. Okay, what did you buy it for? What are you selling for? Kevin, if you want me to go over the numbers with you, give me a buzz. We'll do that. Papa Dad, can someone with a little to no hands-on option trading background become a successful member? Pop Dad, let me give you one bit of advice. You ready? Pop Dad, you ready for this? You might understand this. Let's say, hypothetically, you have an old car in your backyard. Let's say it's a 1968 Mustang, fastback, no engine, whatever. Push it out in your front lawn, and you put a for sale sign up for $5,000. It's a good price for a 68 Mustang fastback, $5,000. Okay, let's say Bill down the street comes by and says, hey, I like the price. Let me give you $500. Hold it for me until Friday. If I show up on Friday, I'll give you the $5,000. Non-refundable deposit. Okay? If he shows up on Friday, he gives you an additional $5,000. He takes the car away. Well, let's say hypothetically he doesn't show up on Friday. If I don't show up on Friday, sell it to someone else on Monday. That's what a covered call is. That's what stock options do. You buy a stock, certain price. Right now we're looking at Siri. If I buy Siri, okay, the current price right now, $21.47. Okay? Listen closely. $21.47 is the current price. See it right here? If I buy it at $21.47, I own it. I can do whatever I want with it. Now, I'm going to sell it to someone at $21.50. They have the right to buy it from me between now and 3:59 p.m. on Friday, the 16th of May. Okay, I can do the 9th of May, which is this Friday. 16th of May, that's next Friday. 23rd, that's 2 Fridays away, so on and so forth. If I own it, $21.47, I could just sell it to someone else at $21.50, pick up 53 cents a share. Now that's 2%. 2% every single week is over 100% a year. It's simple math. This strategy I'm showing you was created for my 9-year-old daughter back in 2008. Daddy, what are you doing? Can you teach me? Okay, now if you have children, you know you want to spend time with your children, hanging out, having fun, doing stuff. So my boys wanted nothing to do with the stock market. But my daughter, she did. She wanted to learn. Okay, great. So the strategy had to be simple, safe, predictable, consistent, and no way for her to lose. So 5 rules. Never buy something you don't want to own for the rest of your life. Number 2, never sell at a loss. It defeats the purpose of the whole game. Number 3, make sure the company's consistently profitable. When I say consistently profitable, I want to look at something like this. Hold on a second. Let me show you, just so you understand. Because when I say consistently profitable, people say, well, what about this? What about that? How about no, no, and hell no? Okay, let's go to historical data. Come on, here we go. Okay, historical prices. Okay, right there, historical prices. Dividends only. All the dividends. Okay, take a look. This is the Qs. Okay, 1.4, 37. That's a huge jump between 1.4 and 37. That's a big jump. Next one, 3.5, 10, 2.9, 2.6, 2.3. That's going backwards. Okay, 54, 27, backwards again. 37, 26, backwards again. 53, 33, backwards again. This is inconsistent. This is not consistently profitable. Let me show you what consistency of profitability should look like. Okay, 2005, 8, 9, 10, 11, 13, 16, 20, 23, 28, 31, 36, 39, 42, 46, 51, 56, 62, 68, 75, 83. That's consistency of profitability every single year. Higher and higher and higher and higher and higher profitability. A dividend is a portion of the profits the company gives back to the investors. If that's what you're looking for, great. Make sure it makes sense. Rule number 3, make sure the company is consistently profitable. There's only about 300 of them that fit what I'm looking for. I only have 2 criteria. 2, when I'm looking for a company to invest in, 2 criteria. 20 years of increased profitability and weekly options. That's it. That's the only criteria I'm looking for. 2 decades, 20 years of consistent profitability and weekly options. There's about 300 of them. That's more than enough for me. Okay, everyone's different. You got to figure out what works for you. Diamato, Siri, EX dividend, got that one. What if my call is assigned? Do I get the dividend or not? Well, you have to, in order to get the dividend, you have to own the stock on the date of record. Okay, there's 4 dates to remember. Hold on, let's go back to. Okay, dividend calendar, 4 dates to remember. Date number 1, announcement date. Hey everyone, this is James from Dividend Stock Talk. We made a whole bunch of money this year. This is how I'm going to share it with you on this date. This is how much you're going to get. The announcement date. It tells you what you made and when you're going to get it. That's the announcement. Date number 1. Date number 2 is the EX dividend date. That is the last day the stock trades before the dividend is paid out. And that, my friends, are these little green dots. Kroger, Consolidated Freight, Microsoft, ExxonMobil, Applied Materials, Raytheon, Discover, Energy Transfer, Costco, Plains All American, Morgan Stanley, Kinder Morgan, Metropolitan Life Insurance, Chevron, CVX, Johnson & Johnson, NEM, Energy, okay. So they're there. They're actually a list of companies. Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list. Those 5 lists right there will give you over 300 companies that you can invest in. Do I have any mentorship? Yes, I do. Drop me your phone number. I'll give you a call. I promise I'm not going to try to sell anyone anything here. But if you want to have a conversation, seriously, I'm not going to try to sell you anything. You want to have a conversation? Send me a number. I'll give you a call. All right, let's keep on keeping on. We got 4 minutes before the show is over. BKE, never heard of it. Sorry, I understand how options work, but what about learning options platform? Oh, let me change that back. Here's the options platform. Okay, it's not that difficult. Okay, over this side, puts. Over this side, calls. right here down the middle, okay? Strike prices. What's a strike price? It's an agreed price that you want to sell it for, okay? Any contract requires 4 things. 4 for any contract. These option contracts require 4 things. Beginning date, ending date, agreed upon price, and consideration, money. Okay? You have to pay money. You have an agreement, a beginning date, and an ending date. Okay? Now, if the current stock price is $21.47, right? I don't want to look at the puts. Okay? Don't confuse yourself, because that can be confusing over here. Find a strategy, stick to one strategy, perfect it before you go on to something else. That's some free advice. Okay? You cannot run until you know how to walk. You cannot walk until you know how to crawl. Okay? Simple. You can't swim until you get your feet wet. All right, so if I'm buying it, here's the current price, $21.47. $21.47, the closest strike price to $21.47 is $21.50. That's it. What is it going for? It's going for 53 cents. Okay, that's it. Do you want to do a covered call? Fine. Right here, look. Bring cursor up here. Hit that right there. Covered call is right there. Click on that. Okay, great. The $21.50 is right here. Bring it over, and I want to buy it at $21.50. There it is. It fills it out for me, everything I want. Next, I figured how many do I want? I have mine set for 10 because I like to buy 1,000 shares. 1,000 shares this, 1,000 shares that, whatever. Whatever you can afford. So let's just do 100 shares. Change this to 1. Okay, there's 1. Now, I want to do a market order and not a limit order. Now, here's my reasoning. My reasoning. Okay, I'm not telling you what to do. I'm just telling this is what I do. The reason why I do a market order as opposed to a limit order. A market order will fill instantaneously first thing tomorrow morning. Also, the option price is already worked into the equation. I'm buying stocks, I'm selling the options. So if I click on this little icon there, here's the order right here. Buy 1 covered call of Siri, 100, that is the weeklies. 16 May 25. That means the option that I am selling is expiration date of the 16th, which is next Friday. So whoever buys it from me, they have from the moment they pay for it until the moment it expires. They can do whatever they want. Okay? After that, the $21.50 call option against the series stock at the market to open. Here's my profit, $48 per contract. What is it costing me? All cash, it's costing me $2,100. Margin, it's costing me $1,000. Do not do margin until you understand the risks involved. Do not do anything until you paper trade for a while and you understand it. Make all your mistakes with monopoly money. The only thing you're losing is your time. But you're not really losing your time because you're learning something. And trust me on this one. If you don't do it yourself, you have to rely on someone else. And I can almost guarantee with 100% certainty, nobody has more interest in your money than you. All right, so 11:29. I'm going to finish up with whatever questions we have left. We'll be here back again tomorrow night, so we'll do it all again then. It's me, Dan. How are you doing today, Dan? This is super easy. Yep, you've been here before, Dan. You know it. Okay, Pup Dad. What is the best way to reach out to you to chat about joining the group? Most likely right here on TikTok. Okay, now I have 2 TikTok channels. The one you're on, which is The 10MinuteTrader, which goes to my website, The10MinuteTrader, or the other TikTok channel, Dividend Stock Talk, brought to you by The 10MinuteTrader. Okay. So that being said, let's keep on keeping on. Oh, so you don't buy contracts, you buy the shares and sell contracts and collect the price of the contract. Absolutely, Muhammad. Muhammad, think of it this way. If 80%, that's 8 out of 10, 4 out of 5, okay? 4 out of 5, all options expire worthless. Why would I buy them? It's a valid question. If you knew ahead of time, 4 out of 5 options, 4 out of 5 expire worthless, why would you buy them? I don't buy them, I sell them. I want them to go worthless because the stock market is a weird place. I can sell something and then turn around later and buy it. But you keep the premium. Absolutely, Teddy. The premium is totally separate. Teddy, think of it this way. Stocks are usually traded in New York. Okay? In New York. Options are usually traded the Chicago Board of Options Exchange in Chicago. Options, Chicago. Stocks, New York. So you buy them here, you sell them here. Oh, this is so fun. I see it now. So where does the percentage come from? Muhammad, the percentage. Okay. The profit, maximum profit, $48. What did it cost? Cost of trade, including commissions and fees, $2,102. Okay, let's do some fancy little math. Glasses. Getting old sucks. Okay, clear that. Profit, $48. Okay, what did it cost me to do this trade? $2,102. Uh-oh, that's not right. $48 divided by, can't forget that, $2,102. 2.28%. 2.28%. That's just this trade right here. Okay? I do this every single week. Okay? Monday, Tuesday, Wednesday, Thursday, we have a live trading group first thing in the morning. Okay? It is a paid service. I'm not trying to sell anyone anything. I look at my stocks twice a day. Once in the morning with my paid trading group, because they understand. Okay? And second, here with you guys. Other than that, I don't look at my stocks at all. If date of record is the same day as your option expires and your shares are assigned at the end of the day, do you get the dividend? Ooh, I think that trips people up is the collateral for a CCP. What does the Chinese Communist Party have to do with this? All right. Money Island Production. Would you like to join the group? Awesome. Welcome aboard. Send me a number. I'll give you a buzz. Or you can just go right to the website. Website. Okay. Homepage. Okay, money. Website right there. Live trading. That's it. The 10-minute trader. Okay, so go. The 10-minute trader. See this guy right here, the computer screen, right there. Let's get out of there. I promised I wouldn't try selling anything, and I don't. I normally don't, unless someone asks. Okay, somebody asked. Mohammed, that's per $2,000. Do you put the full account balance on a trade, or do you multiple small prices like $2,000? Mohammed, I made the mistake once, many years ago, where I put all my money onto one trade. Yeah, I lost 91,000 in like 3 or 4 days. I'll never do that again. Okay? I can't tell you what to do. I only can tell you that when I put all my money into one trade, I lost it. Okay? So I wouldn't do it if I were you. I can't tell you what to do, but I wouldn't do it. Kevin, bro, it's a pre-recorded video. Why would you say it's a pre-recorded video? Anyway. Thank you for your time. Appreciate it. Michael, Rhode Island. Don't worry that the market might change the next morning, Andrew. Market overnight might be priced much differently than originally thought, which would change your profit potential. Absolutely. Wow, valuable information. Thank you very much for your time. You're welcome. Oh, cash secured put. Okay. CCP, Chinese Communist Party. That's what I thought. What is your game plan for tomorrow? Okay, Dominic, 90% of all my trades are already done on Monday. Tomorrow, my game plan is nothing more than just looking at where my stocks opened up at in the morning, where they are, how it relates to where did I buy, what did I sell, what are the odds and probabilities of me winning or losing come Friday afternoon. That's all I do on Tuesday, Wednesday, and Thursday. We just look at our account, make sure there are no surprises. A1 Stake, what happens when you ignore the margin call? If you ignore the margin call, they will take care of it for you. Seriously, they will. Okay? That's what I mean. CSP, cost secure put. Yeah, well, you said CCP. Okay, CCP is Chinese Communist Party. CSP is a cash secured put. Yeah, okay. Now, I do them once in a while, but not that often. And yes, I do have mentorships. I don't want to pay taxes. I don't blame you, Robert. What platform do you use? Culdeep. That is Think or Swim. It's offered through Charles Schwab. Put it into a trust fund. Awesome, yes. Yep, I saw that, Teddy. All right, so Robert said trust fund. Yeah, you can put it into a trust fund. New Jersey 78, Mara. Yes, I like Mara. Steve Martinez, PANL, never heard of it. Or put it into a charity. You don't pay taxes. That works too. What platform do you use to trade? We already did that one. Is Tesla stock a good investment? I can't tell you that because I have no idea what you're looking for. Only thing I can tell you is I don't do it. It's called Good Investment Now. Oh, okay. PANL. Steve, I have no idea what that is. And I'm getting ready to leave, so I'm not doing any more stocks. I'm just answering questions. Ish mi amor. Okay. Bonjour, bonsoir. Comment ça va toujours? What? Oh, found that Wade cookbook at a thrift store. Love it. Mary June, I'm glad you like. I love that book. It was simple. It was easy. Wow. Oh boy. Mary June. Okay. Down. Topher. Or is that Topper? Topper. Price earnings ratio. Is it important? It depends on what you're doing. What I'm doing is not important. Mohammed. How do you lose money if you're selling the contract right away? Seems impossible. Okay, Mohammed, most people, you included, okay, are going to lose money by hitting the wrong button at the wrong time. It's as plain and simple as that. Okay, a lot of people do it. As a matter of fact, this year, during one of my live shows, I hit the wrong button. I lost, I think it was $2,500 because I hit the wrong button. And I said to the guys in the group, I said, nobody saw that? Nobody saw me hit the wrong button? Anyway, besides the point. Live and learn. Rob Vine, you obviously borrowed more money than you could afford to pay that. Yep. Mary June, thanks. You're welcome. I own a lot of estate long-time investments. All right, cool. Everyone's different. Kevin Nice, I agree with Gary Waters. I have no idea who Gary Walters is. Different alloy metals is a good investment. I'm going to say no, because alloy metals, gold, silver, platinum, palladium, copper, whatever, they don't produce cash flow. That's what I'm looking for. Lisa M. Well, I guess I was so tired I fell asleep listening to you. You've had a rough day. I'm sorry about that, kiddo. Have a good night. I'll be back the next live. More questions. If you don't mind at all. That's why I'm here every night, 9 p.m. to 11:30. Which dividend stocks do you recommend to sell covered calls on with less than 20 to 15 PE ratio? Okay, Rink and Paul, you're asking the wrong questions. Okay? And I don't give advice. Like, the boys just use a lot of common sense. That makes sense. Do you have a list, Steve? Yes, I do. Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list. I want to learn too. Consider me the grandson that wants to learn from you. Basha, how are you doing? Paul, he doesn't recommend. He does what he does. He does what he does. You recommend what you like, and if the math works. Yep, that sounds about right. Boycott Meta. Interesting. Bill, I know it works for me. Awesome, Bill. PANL, panel, never heard of it. What stocks do you agree with James? Okay. Kings, Aristocrats, Champions, Contenders. Thoughts on NWN? Northwest, wait a minute, is that NWM? NWM or NWN? What the hell is NWM? NWM. That's not even a stock, dude. Okay, Rink and Paul. Okay. NWM. National Waste Management Holdings. It's not even a stock, dude. You might be thinking of NWN. Nancy William Nancy. That's Northwest National. And that's a no. If the strike price has been met in the middle of the week, can I close my position? Yes, you can. Okay, Steve, what the hell is PANW? PANW. Palo Alto. What the heck is that? Never heard of it. Isn't that weird? I've never heard of this. Well, let's see why I've never heard of it. PANL. Steve Martinez, 2019. This thing's not 20 years old. No. And then look, 3 cents, 2 cents, 3 cents, 5 cents, 10 cents, 10 cents, 10 cents. No, 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 no. Sorry, dude, you weren't paying attention. Olivia, good evening. Thank you. Very enlightening. I'm glad you like it. Come back again. Y'all come back now, yeah? Ooh, now it's come the time to say goodbye to family, friends. We'd like to thank you for kindly dropping in. Please join us next week at this locality to have a heap and hollering of our hospitality. Hillbilly, that is. Swimming pools, movie stars. Okay, what does a strike price been met? Okay, what in the money, blah, blah, blah. Todd Vegas, Paul, Dad, Steve, BB, Elliot. The point of selling weekly is to get the best dividends. No, the point of selling weeklies is to get a cash premium. Yeah, Northwest National Holdings. Yeah, no, it's a monthly. It's not a weekly. Rankin. I did 780% an hour. Cool beans for free. Wonderful. Hey, man, Are you charging people? No, I'm not. Don't. I charge 0. Cool beans. Diamond Natural charges 0, and we do a lot more percentage. Well, double jolly good. Opinion on Ben. I love Ben. Unfortunately, Ben is a monthly optionable stock, and that's no for me. Can you give the info on your website? The 10-minute trader. You're forgetting the 10 part. Okay? The THE10MinuteTrader.com. The 10MinuteTrader.com. You forgot the word 10 in there, or the number 10. We've kindly, now it's time to say goodbye to all our company. But anyway, Bill, this is valuable information. Well, I like James. After all, blah, 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 blah. They will sell you off. I have no idea what that means. Okay, Steve Martinez, I looked at panel. No. Don't want to pay taxes? Use this strategy in a Roth IRA. Yeah, that could work. Charles Schwab, did they ever do the same day automatic settlements yet? I don't pay attention to that. Yeah, Rickon. Yeah, NWN. I know who they are. They're still a no. Zatran San. Good evening, sir, and how are you today? Okay. Do you make money on calls if they pass your strike price? Yes. Scott Levi, thank you. Josh, thoughts on investing based on business cycles? Oh, you mean seasonality. That's basically, yeah. Right here, we have what's called a seasonality chart. It tells me exactly how does the stock react based on the seasons or cycles. Okay? I don't know. You had the same washing machine, James. Thank you. I have calls on Kohl's, $12.50 for July. Cool beans. Cybersecurity stock. Okay, got it. Okay, thank you for your time and energy. Be in touch. Pop Dad, cool beans. SU. SU, what the heck is SU? Well, doggy. Yep. Mark's Capital, you got that one? Thank you for your teaching. You're welcome, Muddy Island. What time in Australia are you online? I'm online right now. I have no idea what time it is in Australia at this moment. Mo Harvard, have a good night. Thank you. Josh, do you use business cycle strategies with weeklies? Yes, I do. Suncor Energy. Ooh, I like Suncor Energy. I do. All right. Other than that, it is 10 minutes to 12. You guys all have a great night. I answered every single question we have here. That's what I plan on doing every single night. I'll answer every single question. Another good job. Woohoo! Yay for me. All right, so that being said, you guys have a great night, and I'll see you again tomorrow. Same bat time, same bat channel. And meeting, we're done there. And over here, you guys have a great night, and see you again tomorrow. Tomorrow, we'll see you tomorrow. You're always a day away. All right, you guys have a great night. See you again tomorrow. And now, the end is near, and so I face